Racing is fast and exciting at the picturesque Woodbine and Woodbine Mohawk Park racetracks in Ontario, Canada. Woodbine Standardbred, home of the Pepsi North America Cup, a summer classic.
Pebble Beach in Iran.
And Woodbine Thoroughbred, home of the historic King's Plate.
But the mighty filly has devastated them.
Full fields, exotic wagers, iconic events. Play Woodbine Thoroughbred and Woodbine Standardbred today at your favorite wagering location.
Elite Power to the front at the 16th pole. Gunite is second, but
Elite Power is moving clear and going to take the rear dirt sprint by a widening margin.
5-5 all evading at 875 down or down 900 and 900 pounds.
Elite Power does it again in the Breeders' Cup Sprint in 108.34.
At the heart of really what we come to do well is understand our clients.
Understanding what the needs of the family are.
Help them make some decisions.
Preparing the next generation for what's to come.
Being on a first-name basis, getting to know their stories.
Working through their questions, their concerns, and figuring out the solution that's best.
They trust us enough to come in and help them solve that.
You really feel at the end of the day when you add value, there's a great sense of accomplishment and reward.
Henry David Thoreau once said, "It's not what you look at that matters, it's what you see." In managing wealth, there's an awful lot to look at. Taxes and trusts, family meetings and bonds, and everything in between. It's why we rely on those who know each of these fields so deeply that they can see where others are merely looking, who can focus on what's best for clients over generations. After all, that's what expertise is.
Hi, my name is Gary Falter with the Jockey Club. I'd like to welcome everyone to today's online Zoom panel. Now, this is the 5th panel in our series of 10 online Zoom panels this year. And today's panel, we're going to talk about the economics of our sport and specifically as it relates to thoroughbred ownership. But before we get started, I'd like to recognize and thank our sponsors, starting with our presenting sponsors, the Green Group, Bessemer Trust, and Stoll Keenan Ogden. And today's panel sponsor are Juddmonte Farm and Woodbine Racetrack. I believe you saw their commercials early on. And our Q&A sponsor today is West Point Thoroughbreds. And our thanks to all the sponsors for their continued support of thoroughbred ownership and helping us offer these webinars at no charge to you. And if you see this screen, this is a pretty impressive group of sponsors who are committed to thoroughbred ownership. So thank you very much, sponsors. So let's get started. I'd like to introduce our speakers. And I'll start off by saying we're very fortunate to have this outstanding group of speakers with us today. So I'll start with Everett Dobson. Welcome, Everett.
Thank you, Gary. Good to be here.
So, yeah, thanks. So Everett is the owner of Cheyenne Stables and Candy Meadows Farm, and he is the executive chairman of Dobson Fiber, which is a private landline, fiber optic, and data storage business based out of Oklahoma City. And Cheyenne Stables owned and co-owned Grade 1 stakes winners Mastery, Caleb's Posse, and Olympiad. And he's also a member of the Jockey Club. Next, I'd like to introduce Tom Rooney. Welcome, Tom.
Thanks, Gary.
So Tom is the president and the CEO of the NTRA. He's also a thoroughbred owner and breeder who hails from one of America's great sporting families. And I'll talk about that here in a second. His family owns Shamrock Farm. That's a thoroughbred breeding and layup operation in Maryland. And Tom served the people of Florida, the 16th and 17th districts in the U.S. House of Representatives from 2008 to 2018 in Washington, D.C. And he also served active duty as a captain in the U.S. Army from 2000 to 2004. And you may recognize the name. The Rooney family has been the majority owner and operator of the National Football League Pittsburgh Steelers since 1933. So all you Steeler fans in the audience, Mr. Rooney's family is the owner of that team. Next is Marshall Graham. Welcome, Marshall.
Great to be here. Thanks.
Yeah, we had you at Saratoga a couple of years ago when we had our last in-person conference, and Marshall is the professor and chair of the Department of Economics at Rhodes College in Memphis, Tennessee. So great to have you on this panel talking about the economics of our sport. So Marshall, he has over a dozen academic publications related to the sport of horse racing. Marshall's been an owner of racehorses since he claimed his first horse back in 2008. He co-founded 10 Strike Racing in 2016, and 10 Strike Racing has won over 30 stakes races and won the owner's title at Parks Racing in 2016 and 17. And Marshall has also bred 5 stakes horses from his modest broodmare band. So those are our speakers today. And audience, we have a lot of ground to cover. So if you have a question for our panelists, just use the Q&A button at the bottom of your Zoom screen. And at the end of the seminar, we'll answer as many questions as we can. So let's get started into the content, the speaker. So I believe it's safe to say that nearly everyone in the industry knows that the thoroughbred foal crop has been on a downward slide for many years. You may remember back in the 1980s, the foal crop peaked at 51,000 foals, if you can believe that. That's a lot of foals. And for many years, from 1991 to 2007, the foal crop stayed fairly consistent at 35 to 37,000 foals. But since then, the foal crop has dropped considerably. And in 2023, which was last year's foal crop, it's estimated to be 17,200 foals. So 51,000 in 1980s to 17,200. So today we're going to take a deep dive into some of the economic data for our industry and try to determine just where we are, maybe how we got here, and what, if anything, can be done to reverse some of these trends. And at the end of our session, we hope that the panel has shed some positive light on why the current state of our industry really makes this an ideal time to be a thoroughbred owner. So we're going to start off by reviewing some economic data that comes directly from the Jockey Club Fact Book. So I am going to bring up the first screen. Okay, so the first screen shows the foal crop from 1990. So go back to 1990. We had 40,000 foals, about 72,000 races, 82,000 starters, and purses were at $714 million. And the average purse back then was right around $10,000. So that kind of gives us a baseline to start with. So if you fast forward to 2015, or 2005, my mistake, the foal crop dropped to 35,000 foals. So that's about a 13–14% decrease. And a lot of that is just adjustments, I believe, in the industry. But look at the number of races. The number of races dropped from 72,000 to 52,000. And likewise, the number of starters dropped. So we have fewer foals. We had a lot less racing going on in 2005. And, I know there was a lot of racetracks that shut down, some of the smaller tracks in the country. Recently, Arlington Park, I think maybe back in this era, the Hollywood Park closed up. So we lost some racetracks during this time. But look what happened to the purses at that stage. They went from $714 million to over $1 billion. So here we see a trend downward in foals, races, and starters, and then a considerable uptick in purses and average purse. So the purses went up by 51%, and the average purse more than doubled. So let me go to one more slide here. So fast forward to 2023. We've gone from 40,000 foals down to 17,200. So that's almost a 60% drop from 1990, and 50% drop since 2005. And the number of races likewise have dropped considerably, and the number of starters. And I guess that's to be expected when the foal crop drops by such large numbers. But the thing that really catches my eye on this slide is the amount of purses. It's gone to almost $1.4 billion. So that's a 28% increase. And the average purse has nearly doubled since 2005 to $41,000 on the average purse. So I just wanted to kind of leave this slide up on the screen for a moment and get your impressions on some of this data and what do you think it's telling us, if anything? Everett or Tom, what are your thoughts?
I think I can, start us off here. This is Tom. Obviously we're a gambling sport, and with all the introductions of new types of gaming or gambling in that time period, I mean, you're talking about 1990 to 2023. I remember the Florida Lottery coming around 1990 in that time period, how big of an impact that had on racing in this state. I'm sure it was similar to other states that had the introduction of a new type of gaming to where, people didn't necessarily have to go down to the racetrack to gamble. Of course, I think you said, Gary, in there, after a certain period around 2005, the foal crop kind of leveled off at about 35,000 before dropping significantly recently. And I think that that's the introduction probably of even more casino type games or access to those games. And then, of course, to betting apps where you can bet on sports on your phone. So with all of those things, they're all relative, obviously. When you have foal crops, you have number of races, you have number of starters. I mean, it all makes sense there to decrease with the introduction of other types of gaming, I think. But at the same time, the legislatures, I believe, in most of these states, through lobbying efforts in the racing industry to increase new types of gaming or introduce new types of gaming to try to get a piece of that pie with the lottery or with other types of gaming, to where racing would get a piece of that money for their purses. And so I think that you've seen that increase as racing has seen a decline in their number of foals, number of races, number of starters, but they've been able to successfully get the purses to continue to increase. And so where we are now, I think maybe, whether you call it attrition or a settling point, it could be a good spot for moving forward. All things being equal with gaming on your phone, with casino gaming, whether it be on an Indian reservation or otherwise. And then, of course, all of the other legalized gambling you have with lotteries and the like. So, this might at first blush look like it's bad news. Of course, with the purses, it's good news for those of us that are owners and breeders. But at the same time, there is a concern with the amount of tracks that have closed, our families' tracks being some of them in that time period between 1990 and now, to where you have to make sure that obviously we have sort of like a farm system or a minor league of racing to be able to have the big tracks that we all enjoy and see more visibly.
Okay. Everett, Marshall, would you like to give us your thoughts on some of this data?
Well, I'll weigh in, Gary. I echo a lot of what Tom said. It's pretty evident when you look across the country where the purses have flourished, and there is obviously purse support from primarily gambling, alternative gambling, mostly historical racing machines, but certainly some slot machines in certain jurisdictions. But there's always been some level of purse support. whether it's when you buy a horse at Keeneland, that portion of that money goes into Keeneland's balance sheet, and some of that is supports their their racing purses for the two race meets a year. There's also purse support in Texas. Texas has lobbied a sales tax on equine related sales activity. So you see pockets where the purses have done well. Years ago, in most racetracks you were charged to get into the track to watch the festivities. Today, it's, with the exceptions of a few places like Saratoga and the Breeders' Cup, we want our fans to come participate, and we want them to come and gamble with us. So it's at least from the purse standpoint, it's been hit and miss, and it's largely structured around the alternative gaming that allows us to support those purses.
So you think the purse structure that we have today, and $100,000 maiden races, $120,000 allowance races, I mean that factors into this number. You think that's encouragement for owners to stay in the game, to expand their stables, or even new people to come into the game?
I'll answer it this way, and that is 10, 15 years ago, there were a lot of people in the sport that said this is a dangerous path we're going down. Gaming, alternative gaming, slot machines, historical racing machines supporting our purses. The reality of it is it has proven to be sustainable over those 15 years or so, or longer in some cases. So is it a risk factor? I just don't think it is. Now, certain states, when legislatures determine that it no longer supports their needs in that particular state, sure, they're going to take a grab at it occasionally. But by and large, what is the leading indicator of success is sustainability, and we've had that for going on 20 years in a lot of places. So that's my answer.
Okay, Marshall, what are your thoughts on this first screen?
Well, I think overall we sort of look at the numbers and they're positive. I mean, if you adjust for inflation, purses are up 74% since 1990, up 23% since 2005. And, that covers, that period of time covers in 1990 was sort of the end of an era. Back to 1990, you still $8 million done on track at Santa Anita. So basically, there was a nascent days of simulcasting. Simulcasting would come in the early 1990s. In 2005 was probably, the peak level for, handle overall, and it's sort of the low point for the ratio of handle to purses. And then as you sort of move to this, to sort of the current era we're in, which we've already talked about, this era of gaming sustaining thoroughbred racing, it's been very great for thoroughbred owners. This doesn't even emphasize how much maiden races and allowance races have jumped just dramatically over this 15, 20 year time period. The ratio of handle to purses to handle now is pushing 10 to 12%, which is historically much higher than it's ever been. So from an owning standpoint, I think that's really promising. I do think that when it comes to breeding, and even when it comes to sustained ownership, we have to think about what the future of the game would be out 10, 15 years, especially when we think of breeding, right? Being involved as a breeder, you want a sense that the game is going in the right direction, that there's less uncertainty. I even think about this as a New York breeder. I breed New York, and suddenly I'm told there'll be no dirt racing in the winter and come 2026, 2027. So to me, that's an uncertainty. I mean, I'm a dirt guy, and I'm not really much interested in racing on synthetics. So that suddenly changes my outlook for something that I've invested capital in. So all of these things, and that's a small example. Is what does the future bring? I do worry more about our dependence on gaming. I think we can look to West Virginia for an example of a state that had gaming, and it allowed Mountaineer and Charlestown to really prosper, and then the gaming went away and the purses fell. We can look at Florida and what happened with the decoupling and the elimination of dog racing. I think it's critical that we as a sport figure out how to, get fans back gambling on the races. We can't solely be supported by alternative gaming. So, but for now, so, in terms of thinking about your entry point as an owner, in some ways, claiming has never been better because you can get your horse right now and compete for these great purses. You buy yearlings and 2-year-olds, there's a little bit more of a time horizon, but the maiden special weight purses make that a more practicable venture. Breeding, a little more uncertainty because we just don't know where we'll be 5 to 10 years from now. And again, I hope that we can do more. To me, the first to handle ratio being above 10% is alarming, right? We need to do more to be more self-sustainable.
Okay, so this next slide just kind of shows the trends in the foal crop. You can see the foal crop, and the number of races and starters. They've trended very similarly. And then the purses, how the purses have increased substantially over the last 10 to 15 years. So what I'd like to do now is talk about some of the auction data that we've pulled since 1991. So this next screen shows the yearling auction statistics, and we're going to go from 91 to 2023. So in 1991, there were about 8,700 yearlings that sold, which was about 22% of the crop. $29,000 was the average price, and the median price at that time was right around $7,000. So if you move forward, and that kind of gives us our baseline, again to 2005, we went to 10,000 yearlings at the same time that the foal crop dropped from 40 to 35,000. So in 2005, that was a 15% increase in number of yearlings sold. 29% of the foal crop sold as yearlings. A $54,000 average price, which is pretty healthy. An 87% increase. And a $13,500 median price, which was nearly double what it was in 1991. So it kind of gives you a snapshot of what things were like back in 2005 as it relates to 91. And you look at 2023, the number of sale yearlings, 7,340 from a foal crop of in the 17, 18,000 range. So that's, that's less, obviously, but it's 42% of the crop sold as yearlings. And the average price, $87,500. So that's almost a 60% increase from 2005 and is triple what it was back in 91. And I think another good telling number is the median price in 23 was $30,000, which was more than double what it was in 05 and 4 times what it was back in 1991. So, and I think that median price is always a good barometer of how healthy is the market from top to bottom. It's not just healthy at the top, but a $30,000 median in 2023 seems to be a pretty healthy number. So also just like to spend some time talking about these numbers and how the foal crop has dropped considerably, but yet we still have over 7,000 yearlings going through the auctions, and our average price at 87,000 and a median of 30, should tell breeders that I would hope that they can recover some of their investment, if not all. What are you guys' thoughts on these numbers as a breeder?
Well, one thing, and I just want to jump in here real quick. One thing that's I think interesting to point out is that while it's a 60% jump in average price for a yearling, it's actually inflation with 60%. Prices are 60% higher. So in real terms, the sales price of the average sales price has dropped 3% since 2005. Now the median is still up 38%. And again, as Gary also already mentioned, is there's many more horses that now go through the auction. So again, the 3% fall in the average price. I don't know that that's necessarily worrisome on the breeder side, because so many more horses now go through the sale. But I think it's just interesting to point out.
I mean, do you all feel that the health of the market is mostly at the top, or is the middle and lower market still a good place to sell?
I mean, I buy and sell mostly in Maryland and at Timonium, and I don't know what the numbers are for there. I mean, obviously, I don't think that our median price is 30,000 or average price is 87,000, but it's interesting. Sorry about that. Of course, right when I'm speaking, the dogs go. When you go 42% that are going through the sales as opposed to 20, 21, and 29, I mean, obviously that means there's a lot less horses that are being bred to race, which is mostly what I think happens more in the regional markets. I could be wrong about that, but that's what I do primarily. There's always the question of what stallion is commercial or not, and what's going to bring you your investment back when you send that yearling through the sale versus, well, it might be a good nick to breed this stallion to this mare, but that stallion's not commercial, so you're not going to get anything unless you're willing to race them yourself. And I think that used to be, obviously, according to the numbers, a lot more commonplace, and now it looks like it's getting closer to 50-50 for people that do that versus just breeding to sell. And so I think, to sort of answer your question, it's more of a matter of like, what can you afford to do? And for the smaller breeder owner like me and maybe Marshall, there's still sort of this instinct to breed to race. And I just think that that's changing though.
Okay. Yeah, with 42% of the full crop going through the sale, you're right. There is a lot less breeding to race that's taking place. Everett, any thoughts on your side?
That's definitely what's transpired. I mean, the numbers point to it very vividly. We at Toba a few years ago, we had a discussion along these lines, and actually convened a call with a lot of the state racing officials and breeders in various states. And if there was a takeaway that I had from that, was that the state bred program were vastly different across all the country, but the state bred program is very critical to the economics of the breeding within the states. So my conclusion was that there's some best practices that perhaps we as an industry need to start exploring between what makes a successful state program versus an unsuccessful program. But the economics are, they're tough when you're, when it's a kind of a downward spiral on the numbers. But look at the bright spot. Kentucky's doing exceptionally well, and it's holding up, or the breeding side of the sport, pretty significantly when you look at the number of the full crop as well as the sales volume. Yeah, so, but I wish we would do more to get more breeders into the sport, and I honestly think that the revised purse structure in some of these markets it should help. It will help. I want to get my hope is we get more breed to race people back into the sport, and higher purses should help that. We've got a more favorable tax structure than we've ever had. Thank you, Tom, and for all your initiatives along those lines. And so there's a compelling reason to breed to race, particularly when you consider what it costs to go buy a viable racing product, a racing prospect at a public auction. So
Gary,
that's my spin.
Can I add something to what Everett just said?
Sure.
I totally agree with that, by the way, especially in regional markets like Maryland or Pennsylvania or New York or Florida. one thing that drives me crazy as somebody who's a small time breeder owner is breeding to my small group of mares to stallions that I think that are good for them, getting them ready for the track, getting them to the track, only to have them claimed in the first or second race and disappear to a state that I get no bonus money from. And like I did very well with a horse named Coffee with Chris, who actually went on to race in the Preakness, $1,000 stud fee to ride on Curlin, went on to win a bunch of local stakes races in Maryland. For me, getting that check once a month as the breeder was awesome. Exactly what Everett's talking about, how you get new breeders. But if they disappear to West Virginia and these horses win over there, I get nothing for that. I bred the horse, I brought the horse up, I started him, did everything that I was supposed to do the right way. They get claimed because, that's the level that these horses, need to start to win. So I think the solution to that, when things that, when Everett talks about, what might be best practices outside of Kentucky, is that maybe states like Maryland and West Virginia and Virginia and Delaware and New Jersey, maybe Pennsylvania, can somehow get together and do some kind of a bred fund, mid-Atlantic type bred fund or something like that, to where even if my horses go race somewhere else in the region, that I still get a little bit of a payday if I bred that horse or I had that horse and it lost in a claim or something. But it's so disheartening as a small time breeder to see a horse that you bred and brought up win in another state and you get nothing for it.
Right. Yeah, I've been there myself. I know Louisiana is one of the state programs that pays first, second, third worldwide. We actually had a Louisiana bred that we foaled, and it ended up in Korea. And we ended up 4 years in a row getting Breeders' Award checks from races in Korea. But you're right, Tom. In most cases, that horse leaves the state and wins elsewhere. And the various programs are so different. But I've heard breeders say many times, if I can get a fair price at the sale for my weanlings, yearlings, whatever they sell, I would breed more mares to more stallions, and the full crop might increase. And the same, I think, would apply for someone who's breeding to race. If the purse structure was such that they have a chance to recoup some of their investment. And if you look at the numbers, I believe we're either there or close to being there, because these sale prices at $87,000 and $30,000 seem to be pretty healthy. I know, Marcia, you had mentioned that the $87,000 average, if you look at inflation, it's probably just barely keeping pace, might even be a little bit behind. But the $30,000 median might be up a little bit from 2005.
I think is a small time breeder and is obviously on the other side buying horses. It does seem like a good horse with a good pedigree that's well put together is going to bring a big price, right? And there are going to be a lot of people on it. And it's if a horse with less of a pedigree that isn't put together as well, those are going to suffer in the market. I've generally been breed to race, and in many ways breed to racing because of the purses seems a lot more reasonable, like you mentioned, Kentucky, Pennsylvania, New York, and I would definitely, if you think about breeding, look at the different state programs. It is very nice to get checks in the mail once your horses run as a result of the state bred programs. So I've had I think those provide a real incentive to breed, and furthermore, I think some of these state bred programs, because you continue to get paid as your horse runs, they give you the incentive to breed a sound horse. And I think that's good for the game. I had a horse that I bred. This is one of my most profitable horses I've ever owned, was never much more than an A other than horse, right? Won his Pennsylvania bred A other than, but he raced until he was 10 years old. He won 10 races, raced 80 plus times. And I continued to get checks in the mail, right? Because he was a Pennsylvania bred, Pennsylvania sired horse. And it encourages you to breed sound horses. And so I think for the health of the game, right? One thing that we've talked about with all these numbers is, well, the average purses are up, but horses race a lot less, right? So if you can breed a sound horse, and even if furthermore the sport can incent breeding a sound horse, I think that's both good for the pocketbook with Breeders' Awards, state bred breeders programs, and it's good for racing itself.
So we spent a little bit of time talking about, where are we with purses, where are we with the full crop, auction prices, and so on. But we really haven't talked much about the cost of ownership. So let's just kind of change direction here and just talk about that. So a few years ago, the Jockey Club did a study on ownership cost. And the results from this study showed that the average cost to have a racehorse in training was $40,000 to $60,000, $40,000 in some of the smaller jurisdictions, $60,000 in the bigger jurisdiction. And that number is probably low because that was a few years ago. And what was included in that study were trainer day rates, vet costs, transportation, blacksmith, nomination fees, race day expenses. So we tried to cover about all the expenses. The only thing that wasn't in there was insurance because that could vary widely. So, knowing that the annual cost is upwards of $60,000 or more, are there any expectations that owners can have to offset some of those costs with purses, with the purse structure that we have today? So what are your thoughts on it? If it costs $60,000 to $65,000 to have a horse in training, what are the chances of recouping some of that with the purse structure that we have today?
Well, they need to be fast horses. That helps.
Sure.
Faster than their competition anyway.
Yeah, that's for sure. Yeah.
This is the same argument we've had in this sport for as long as I can remember. You'd have and you're right. It's about 60,000 in New York and Kentucky, maybe a little bit less, depending on your trainer. There's some trainers that charge less than others, and there's some trainers that medicate and use more vitamins and chiropractors and so forth than others. So you can shop around and find value in trainer just like you can in everything else. But yeah, but if you run through your conditions, you have a chance to. If you get a horse that's fast enough to run through the conditions and maybe get some black type, you've got an economic model that works. Obviously, your entry level at where you bought that horse has a lot to do with it, but it's not inconceivable. Good horsemen are they're running successful racing stables right now. Not everyone, but that's what makes this sport so great.
Well, wherever that kind of segues into the next slide. So I put this slide together as just an example of a P&L for a horse in training. And this is like a best case scenario. So if the annual cost is around $60,000 and the horse is running somewhere where the average purse for a maiden special weight or allowance is around $80,000, and it takes them 3 years to run out their conditions, just putting some numbers down on paper, when a horse breaks its maiden, it's going to earn about $48,000, and that's gross, not net, because they got to pay your trainer and jock's fee. Non-winners a 2, non-winners a 3, non-winners a 3 other than, and there'll obviously be some placings in there. The horse could earn upwards of $240,000 over a few years. And then if you look at the expenses, you buy the horse at a yearling sale, you're going to have a few months worth of expenses on the horse. And then your year 1, 2, and 3 expenses, that's going to be upwards of $210,000. So when you look at this scenario, and this is again is a best case scenario of a nice allowance horse, it looks like there is an opportunity to recoup some of your expenses with purses. But we all know that if you have a stable of 10 horses, they're not always going to be at this quality. I mean, some are going to be claiming horses, some are going to struggle even to break their maiden, and those are the ones, and the cost, the expenses don't go down. So a horse that doesn't break its maiden or struggles to break its maiden or goes into the claiming ranks, it's still, $60,000 plus a year to have that horse in training. But, if you look at a scenario like this, it does appear that there is an opportunity with the purse structure we have today, if indeed these annual expenses are accurate, to recoup some of your cost without even having a stakes horse. And if you have a stakes horse or a horse that can run in the graded stakes, obviously, the purses are higher and the benefits are even better. Thoughts on the cost of a horse in training?
Well, I'll go first, just from the standpoint that, that's kind of my dream scenario right there, is to be able to net $209,000. Unfortunately, I spent a lot of time at the claiming level, and if I get one that breaks up into the allowance level, it's, you get this hope that, as I heard somebody say, if you've got 10 horses, it'd be good if you had one or two that were paying for the other, 8 or 9. And that's the big gamble that we're all in this industry, though. I mean, when you play in this game, you do it because you have a love for the horse. My wife constantly reminds me that we don't make money doing this, so why do we do it? And the answer is always like that. I love to do it, and there's always the hope that you can get this one horse, like the one that you have on the screen, that runs through those conditions, and that can help pay for your other horses that are at the claiming level. And then, maybe if it's a filly or a mare, that you can breed that mare and get something out of it, or what have you. I mean, that's always the hope. But I mean, certainly at my level, going all the way through those conditions is kind of like my best case scenario. And, hopefully someday I get to enjoy that kind of a horse.
Okay. Any other thoughts?
Yeah, I'll echo what Tom says. It's, once you get to the 3 other, then you're basically a borderline stakes horse, and those are hard to come by. All that being said, you get a horse, you win a maiden special weight, you get the big purse. At that point, your horse has value. And as we saw, I just looked at the prices yesterday from the phasing tipped in July sale, is, there are horses that went for way more money than if they'd thrown them in claiming races. So it was sort of stunned. So, there are ways out. You win a maiden special weight and you get phone calls and someone's offering you money. And, you most always want to take that money because we're always dreaming, hope springs eternal. But there's always a market for horses. I mean, there are more online auctions. There are more points where you can sell and get out of a horse, or you can keep riding and keep hoping for the dream. And so there are lots of in and outs here. And so, when I think of everything as lowering variance. When you claim a horse or you buy a horse that's already racing, you're lowering the variance of an outcome, right? When I claim a horse, typically, it might improve a little, but it has some limit to its upside, and then it might regress a little bit, but you're limiting your downside as well. As when you buy a yearling or when you breed, you're more or less buying a lottery ticket. You could get anything, right? We look at the Derby winner this year was a homebred, right? So, to Golden Sense. I mean, so you have, so that is, so there's real lottery ticket aspect to those. And you can see that in the yearling markets, especially at the high end, where, the sky's the limit in terms of outcomes. So, I think part of it is, what's your risk tolerance and what your kind of aspirations are. I do agree with Tom as well that, I think you have to be in this game because you love the game, right? One thing that we sell to our partners is, that we're going to have fun. We're going to manage this the right way. We're going to try to make money. That's of course our objective, but this is fun. If you don't go to the races and enjoy it, and have a real passion for owning racehorses, and this is not for you, because it's a real tough investment. A lot of the horses that we'll buy, they'll be too slow to race, right? They won't have the mental attitude to race, or they'll get hurt, right? And it'll slow them down. And so, just getting, not all of them make it to the races. Not all of them, not many of them won't win, maiden 20, much less maiden special. So,
right.
Even for me, I enjoy, I take great pride in having a horse that is a hard knocking claimer that's raced 30 to 40 times. To me, I get just as much joy of a horse that has a long career like that.
We've been offering these owner conferences for about 10 years now, both the in-person and the webinars, and 3 things that have come out from many of our panelists as it relates to ownership. Align yourself with good people that you can trust. Don't come into the industry thinking it's going to be windfall profits and a lot of money made. And number 3 is have a plan, have a business plan. And I think part of that business plan is understanding the economics of horse racing, that not every horse is going to be, an allowance or stakes horse. And the cost is the same, whether you're running a $25,000 claimer or a horse that's competing in allowance and stakes. So, those three things have come up many, many times. Align yourself with good people you can trust. Don't get into this to make a profit, because it's hard to do, and have a plan and stay with that plan as you move forward. So, okay, so we've talked about the state programs, and I think that's another big factor in ownership and the economics of ownership. So, for example, if you race in New York, and New York breds can race in restricted races, it has many advantages. And, the whole economics of running in state bred races. And also, a lot of states have breeder incentives. So, as we talked about, you breed a horse, it races in a certain state at a certain level where you can recoup breeders' awards from those horses. So, what I'd like to do next is I've got a slide that just shows where we are with a lot of these state programs and their full crops and so on. So let me go to the next slide. There we go. So going back to 1991, Kentucky had about 7,200 foals, which is about 19% of the foal crop. California, nearly 5,000 foals. Florida, 3,800. And you can just look down the list. Some pretty healthy numbers back in 1991, when we still had 40,000 foals being born. But fast forward to 2021, so that's the latest data that we have for states. Look at Kentucky's actually gone up in the number of foals that it's producing, which is 44% of the foal crop. But what's concerning, looking at these numbers, is California's dropped to 1,300, Florida to 1,300, Texas from 2,100 to 360, state of Washington, Maryland, Oklahoma, even New York has dropped some, not as much as some of these states. And when you do the math, the top 8 states, other than Kentucky, make up 80% of the foal crop reduction. So just wanted to get your thoughts on the state programs. Is there anything that can be done to reverse these trends at the state level? Or is it something that it's here to stay? So just wanted to get your thoughts on, is there anything that can be done to help promote and encourage these states to produce more foals? See what you think.
I'll jump in. The one reason Kentucky with the purses now effect for Kentucky breds, that's really helped. And for the longest time, I focused primarily on the state bred programs because the breeders' awards and incentives, participating in Arkansas, New York, and Pennsylvania. But I've started breeding horses in Kentucky as well, because now to compete at Ellis Park and Churchill Downs and Keeneland, they have big Kentucky bred money in the claiming races and allowance races, and it's easy. You don't have to pay to ship to stallion, and all those Kentucky's committed to dirt racing, right? And so there's been a lot of it is like we've talked about before, is if you're a breeder, you have to think about what do the next 5 to 10 years bring. And so I have about 15 brood mares, and I stand a stallion in New York. And so, I'm thinking about what is Pennsylvania going to be like in 5 years? What's New York going to be like in 5 years? The news of the synthetic, only winter racing in synthetic in New York was standing a stallion in New York and having brood mares in New York was really worrisome, right? Because I've already committed to breed horses, and so I think the state bred programs are really worthwhile looking at. However, a lot of them offer you excellent breeders' awards, checks that come in the mail. When your horse wins, you're a fan of those horses. You're incented to breed a sound horse. And so, there's real value in them as a breeder. And there's still also value in Kentucky. All these states, suddenly competitive environment where you want to breed it.
So do you guys think that a lot of the state breeders have shifted their brood mares to Kentucky for Kentucky to be actually increasing in the number of foals versus decreasing as everyone else is?
No, I don't think there's any question of that. I can cite a handful of people from Oklahoma that have done exactly that, and in other states, and Texas for that matter. A lot of the key breeders in those two states have shifted their focus to Kentucky for reasons of not only are the auction prices better, the conception rate is higher, the facilities, the care, everything, it's easier here. It's just easier to function in Kentucky when it comes to the breeding. But that doesn't mean that there's still obviously breeders in those states, and we need to support them and we need to help them. And I think that one of the best things we can do is make racing fun. People want to talk about their racehorses, and if they bred a nice one and it's a Indiana bred, then that's gonna have some significant impact on doing it again and why they would do it again. But make it racing, and the economics obviously are ultimately going to drive whether or not someone is going to be in the so-called ag business of racing or raising a racehorse. But it has to be part of your it has to be socially fun for you and your family and your friends. No one, there's not any commercial breeders to speak of outside of Kentucky. There used to be, but it's very few. As Tom said earlier, it's mostly breed to race. So there has to be elements beyond the economics that would entice someone to do it. And I think helping every state understand best practice around, state bred programs and even assisting and encouraging, I think would go a long way.
Okay. Any other thoughts?
I think that to add on to that, the states also have to encourage people in those states that the future is being taken seriously as far as the legislature goes, the governor goes, the state goes. Like we've seen recently, I don't mean to keep getting back to Maryland, but they've made a commitment to Pimlico and the Preakness and a training facility. I think New York has done some exciting things. Florida did an incredible job with their lobbying effort to the legislature to help increase purses and pay for things like HISA. So it's kind of like this signal that states are sending to breeders and buyers and people that are interested in our sport, that they're also interested in preserving our sport and not just letting it go by the wayside. I mean, you see some of these states, it's really disheartening when you see a 73% drop in a state like California. And I mean, they're all negative, but except for Kentucky. But I think that there's some signals, as Everett said, of encouragement that certain states are throwing out there, like Maryland or New York, that they want horse racing to be part of their future. And it's important to them as public officials. And I think that that's huge.
Okay, all good points. And it seems like I see an awful lot of ads in the publications from the various state programs, but they seem to be advertising to the same people over and over again. I've often wondered if some of those advertising dollars couldn't go to the general public to try to encourage people in these various states to become thoroughbred owners and thoroughbred breeders that don't really know a whole lot about our business. Because there's only so many within our industry, and people jumping from Pennsylvania to Maryland to Indiana, I don't know of a whole lot of that goes on. But it would be great to see maybe some efforts. I think somebody had mentioned that the best practices of some of these state programs and sharing that with other state programs to see if they could maybe collaborate and come up with a way to get these numbers to increase by bringing in more breeders and more owners in their states. So we're running a little short on time. I want to jump to a couple more questions. Tom, anything going on in Washington legislatively that we should know about geared towards boosting thoroughbred racing and ownership. Anything that you'd like to share with us?
Yeah, just a couple of things real quick. I mean, obviously, everybody that's watching knows how efficient Washington, D.C. is or not. But one of the things that when I was still in Congress, I got to vote on, which was in 2017, the Tax Cuts and Jobs Act is starting to wind down. A new tax bill is due next year. We've been able to depreciate for several years up to 100%. And now it's down to, I think, 60. Next year it's 40, and then 20, and then it goes away. So obviously that's clearly something that we've been working on in working with the legislators that have racetracks in their district, people like Andy Barr there in Lexington, Tonko up near Saratoga, Morgan McGarvey in Louisiana. Good thing about these lobbying efforts is they're bipartisan. And so, usually if we can get people on both sides to help us, we'll be able to see some of those tax benefits that we've been able to enjoy. It's hugely important at the sales to be able to write off a lot of the costs when it comes to horse ownership. It just makes those sales a lot better. Also, real quick, we saw the success of MyRacehorse.com with Seize the Gray, a lot of fractional ownership type outfits like that. Unfortunately, with the way that the SEC set up, the way that they have to go and get approval for a My Racehorse is very cumbersome and time consuming. So Andy Barr has a bill out there that would make it a lot easier, that once you get something like My Racehorse approved, that every horse that you put forward after that doesn't have to go through the same approval process. So that's called the Race Act. It's not limited to just racehorses, but the impetus for the idea actually came from racehorses. So it's just a streamlining of government as we see a lot of, but that will be a big help for fractional and minority shareholders in a horse like Seize the Gray, which if you hung around with any of the people that own part of Seize the Gray, you would have thought that they owned all of Seize the Gray. So it does bring that excitement back into ownership, even at a very small level. And it was very exciting for those people that participated. So just a couple things there that hopefully will help our sport.
Okay. I'd like to just real quickly hit on safety. There've been a lot of safety measures going on in the industry. What are your thoughts on, where we are today with health and safety of the horses and aftercare? Because when I started in this industry in 1981, there wasn't anything like aftercare like we have today, and the safety of it's on everybody's radar. So, just so that newcomers, especially in our industry, for owners, they know and understand where we are with, some of the safety and welfare of the horse and the jockey and the aftercare issues. Anybody want to chime in on those?
Well, I'll say a couple things about it. I'll say, first of all, thank you, HISA, but HISA gets only part of the credit, because there were several initiatives that were underway that predated HISA, driven by unfortunate circumstances in various racing jurisdictions around the country. We're learning a lot about the safety of the racehorse and the safety of the racetracks. I think we're on the upswing in terms of the success that the safety of the racehorse and the racetracks have brought to the sport. I think it's one of the most incredible stories that since I've been doing it for 30 years. So there's a lot of momentum now, driven in large part about uniformity and just the sheer effort that have gone into the study of soundness, racehorse surfaces. You just go on and on. I mean, it's just a bright spot in our sport, and that momentum is going to continue if I have anything to do with it anyway.
Very well put. So, just to kind of summarize before we get into the Q&A from the audience, So we've talked about purses. They're higher than they've been before. Of course, the costs are also higher. So there is some opportunity, looks like, to offset some of your expenses. Auction prices seem to be pretty healthy, especially at the median price level. State breeding programs, looks like there's some things that can be done there to improve their foal crops, medication reform. That's leveling the playing field. Safety is on everyone's radar. Aftercare efforts have been wonderful for our equine athletes, can have a long and healthy second career. So a lot of good things happening in the industry that hopefully those who are in the audience and people that they may know will agree that now is a good time to be a thoroughbred breeder and owner. So we've been going on for about an hour, gentlemen. I know it's going pretty quick. We're gonna just jump off here for a second, go through the questions in the Q&A, but first we're going to hear from our Q&A sponsor, West Point Thoroughbreds, and then we'll be right back with questions from the audience.
How do you become the gold standard in racing partnerships? One horse, one partner, one victory at a time. Congratulations to all our partners who have made West Point the gold standard for the last 3 decades.
Okay, so we're back. So first question from the queue. So this is a question asking about are the trends here in the U.S. for horse racing. We just mentioned some of those trends as it relates to safety, medication reform, purses and so on. Are some of these trends also seen in other countries worldwide, or are a lot of the trends that we're seeing unique to us? Anybody want to take that one?
I don't know anything about the rest of the world has bigger sort of purse problems and fewer owners. So I do think in a more centralized game. So I do think that from a health standpoint, our purses are part of the reasons that a lot of them ship over here. And in Hong Kong and Japan are somewhat unique. You can't just go over and race in Japan. And Hong Kong is really sort of organized as a gambling event. So from a health standpoint, compared to Europe and South America, our purses are good, but maybe the others are no more.
Okay.
What was the question related to purse structure or safety?
Just trends in our industry. Are other countries seeing similar trends? And so I just threw in safety, medication reform, purses, and so on.
Well, I think everybody understands the purse structure in Europe is not nearly as good as it is in the U.S. Australia has actually had some success on all fronts, similar to the U.S. I'm really not familiar much with South America, but I do think safety is suddenly becoming more of a and it's knowledge. This is knowledge-based improvement, and knowledge is going global. So it makes sense. And some of those initiatives started here, and some of them happen in Europe and elsewhere. So safety is a worldwide phenomenon that everybody's keyed in on right now.
And I will say a lot of my counterparts in other countries, they're also dealing with needing more owners and breeders in their jurisdiction. So it's not unique to us. So here's a question about total purse money, and I believe our total purse money was well over $1 trillion, 1.4 trillion as of last year. Is the total purse money adequate to the support cost of ownership? And I believe I've seen some numbers to that effect, and I believe the answer is no. That it does. There's actually more money spent in owning racehorses than there is in purse money. I don't know if anybody else has any thoughts on that.
I hate to steal the floor here, but I honestly think, Gary, I think that just tells part of the story. And let me explain it this way. I have a program that's not unique to me. A lot of people have a similar program. I'm trying to identify at the yearling markets and 2-year-olds to a lesser extent, athletic, well-bred fillies that ultimately could come into my racing stable. They get an introduction to my, or excuse me, they get an introduction to my broodmare band if they're successful in the racing stable. So I am spending on pedigree as much as anything at these auctions, trying to identify an attractive broodmare prospect. So yes, on a racing standpoint, if I have a chance to buy a filly and break even on the racing income, as long as that filly ends up with some black type, then she's paid for my initiative in spades, and she's going to come home and she's going to live out a great life, and she's going to be bred to the best stallion. So it's largely dependent upon your program. I know a lot of people that have created, and we all are all familiar with them, these so-called stallion partnerships, where they're trying to identify yearling markets who the next $50 million stallion is. Well, that's an economic decision that has nothing to do with how many dollars come into the racing stable, how many dollars essentially cost to race a horse against the purse structure of those horses. There's the whole economic model of racing needs to be considered when you take into account what works and what doesn't work.
Okay, great point. Yeah, so racing fillies can have its benefits, whether it's the residual value they'll have as broodmares at some point, and colts, as you mentioned, there are groups that purchase colts just to have that shot at having a graded stakes winner and retire him as a stallion. But most colts end up, there's not a whole lot of residual value in geldings, and people just need to understand that. Okay, I'm going to jump to the next question. What are your thoughts on whether the game is leaving small owners who race at smaller tracks, for example, Emerald Downs, behind, and there won't be a place for us in the future of racing? So what are your thoughts on some of the smaller jurisdictions and what the future looks like for them?
I mean, that's exactly my concern as well. And I think that it gets back to something that we talked about before, when you talk about these smaller regional tracks where the purses aren't anywhere near what they are in Kentucky, and whether or not it's worth it to take risks in those regional markets and tracks to breeding and having a couple brood mares. And I think it gets back to those state bred funds and whether or not there's some kind of a reward for putting yourself out there like that, especially if you're breeding to race. And I really believe, and I don't have any quantifiable, data to back up the idea that I think that you need those racetracks to be able to have the claiming level races, so that there are Churchill Downs with grade ones and Saratogas and that. I just don't know that the sport can be sustained if you reduce the number of racetracks to say like the top 10 in the country and that's it. And all of the races are being raced there in a country that's as big as ours. I do think that there probably needs to be some kind of coalescing in regions to compete with Kentucky. And I think that competition will be beneficial to everybody. So I'm not really answering the question with regard to what it is, but I think that the states have to show the initiative that they want horse racing in their state, and the state bred funds have to be structured in such a way that you're not bleeding money all the time, that you will be rewarded wherever that horse might race. And so I think those are the things that states that want racing will have to address, and they might have to do it together.
Okay.
And let me piggyback on that. I think that very well ties into this sort of issue of handle and the decline in handle, is that, people who ultimately, far down the road become owners, start out the game by start out as bettors, or start out by going to the racetrack, and by losing regional racetracks, we lose an access point to people becoming horse racing fans. And so, already, the decline of Chicago, for example, or losing Northern California, big population centers is very worrisome. So, and again, when you're committing to the game, when you're buying racehorses to compete at a smaller track, again, you need some certainty. So, there's there's not a disincentive to focus on handle. Handle is the biggest measure of fan base, right? People who love horse racing are going to bet on horses, right? And the fact that we are a subsidized sport, we are subsidized by gaming money, and that money can disappear. To me, that's a very worrisome thing. And so, ultimately everything ties back into what we can do to encourage people to wager on horse racing. And this is we have this great opportunity because of the pervasiveness of gambling. In many ways, we have a sport that fits the modern attention span, right? Races are over in 72 seconds often,
Right.
and they're contested, every day. I'm sitting here in this seminar, and in the background, I've got Finger Lakes, Thistle Downs, Parks, and Presque Isle on, right? And so, we need the flourishing, we need a flourishing betting product that can fund the sport, and we can't always be. It shouldn't be that we have to spend our time lobbying state governments for subsidies. It should be that we're focusing on the horse player, focusing on the fan. And I'm worried that we're steering in that direction. And that's fundamentally important for not us. It's fundamentally important for those people who are going to come in as owners down the road, breeders down the road, because there's got to be a starting point. I was a horse player 20 years before I ever got into ownership, breeding, in everything I've been involved, buying yearlings and 2-year-olds, selling yearlings and 2-year-olds.
I mean, ultimately, it comes down to, we talk about handle. I think Marshall was trying to touch on takeout before, being part of a family that owned racetracks. Like, what is the incentive for racetracks to keep their doors open? And Marshall's absolutely right. I mean, just being subsidized by other forms of gaming, but being able to have a racetrack in Northern California or Boston or Chicago, which, we don't anymore. It's speaking of Boston, but, there are exciting things to think about, though, when you talk about online gambling, sports betting, and the like, and that gets us into a whole nother area of whether or not we can have fixed odds part of like FanDuel. So younger kids that Marshall's talking about, to introduce them to gambling on horses, can put the Kentucky Derby or the Travers or the Whitney into their parlay with the Pittsburgh Pirates or whoever, Oklahoma City Thunder. Dad, can I put this winner? And it's like, well, you can't put that into your parlay because it's parimutuel. That's a whole nother webinar, but I think that's kind of another introductory point for a new gambler to come into our sport, which could help the regional racetracks too, as long as they're getting a piece of that action.
Okay. So,
Gary, can I take one shot at that?
Yes.
The small market, big market concept? I hope we don't lose the Emerald Downs and the Remington Parks of this country. But it's interesting to note, and I come from the MBA. I have an MBA, a lot of knowledge of the economics of the MBA. And there's a fundamental principle that is sacred in the MBA, and I think it's actually similar in the NFL. Tom, you would know, but there is the fundamental principle that's called parity for our product between the small markets and the big markets. That's something we don't have in racing. We fight like cats and dogs on a local market basis. We beat ourselves up publicly over the policies and future of our sport. That's something you don't see in the NBA, nor do you see it in the NFL. I think we should take that as a principle that we should look to make part of us. We're not helping ourselves any, and I'll just leave it at that. And I'm not really pointing any fingers. I'm just thinking to elevate this sport. There's a couple of models that I'm very familiar with that are fundamental to their sports, and I think they would help our sport too.
I mean, I love that idea, and I think one way that at least it used to work is that the Breeders' Cup would have regional events, like the Budweiser's Breeders' Cup would sponsor a race at Longacres. And now, as a small-time breeder, I don't know about you, Tom, but as a small-time breeder, I'm just not sure it makes sense for me to pay $600 to nominate my foals. They don't do anything for a lot of the tracks that I race at. A lot of the smaller tracks, it's all for these very, very high end horses. And so, what about bringing back a program like that? I think there are ways that it can be done, that involve some big market, small market sharing, and maybe the Breeders' Cup is the way to do it.
Okay, we're just about out of time. In fact, we are out of time. I just want to throw one last question out. Do you have a chart showing how the cost of breeding has increased over the years? And unfortunately, we really don't have data that tracks the cost of breeding or a lot of the stats like we have in racing. I've always heard that 2.5 times the stud fee, if you can get that for a yearling, you'll make a little money. I don't know if that still holds true. But there really isn't a lot of data and stats on the cost of breeding other than stud fees and boarding rates and veterinary care. But maybe that's something we can talk to Tova about. Okay, so that wraps up our Q&A. If any of our audience has any follow-up questions, please contact me. You have my email address, and I'm glad to forward your question to the appropriate speaker from today. I'd really like to thank our panelists for your time, for your insights to this important topic. Thank you, Tom. Thank you, Everett. Thank you, Marshall, for being here today. We really do appreciate the time you spent with us.
Thanks, guys.
Thanks.
I'd also like to thank our audience for being here and to all owners for investing in our sport. Because without owners, we simply don't have an industry. So we'll be back in August with another online webinar. Until then, we wish you well, have a safe and enjoyable summer, and we hope you visit the Winner's Circle and you visit it often. Thanks, everyone.